Oh, Jenny, thank you for breaking down the move we're seeing on AMAT and their earnings. That's Jenny Horn, co-host of Next Gen Investing. AMAT moving more than 10% higher so far this morning. Do want to welcome in our next guest joining us, Dale Smothers, President and CEO at RDS Wealth Management. Dale, great to have you with us. A bit of a wild week we've had so far. Nice to have some green on the big board, but, very different story from yesterday, mostly sideways through the beginning of the week. What are some of your thoughts on this action that we're seeing in this rotation?
Yeah, a lot of this, Marley, is coming from the AI, which theoretically a lot of investors are looking at as the angel of death. The AI angel of death, when it knocks on your door, it seems as if that particular sector takes a significant hit. We saw it at the beginning of the week, starting with software. It went then to financial services, and yesterday it went into trucking and freight. The reality is this overreaction by investors is likely yielding a lot of opportunities for investors that are long-term focused, because just a simple new innovation does not make the old, let's say, incumbents of that sector obsolete. If anything, the ones that have the cash flow to buy up this new innovation will likely acquire these smaller startups and just work it into their existing workflows. So this is where we've seen a lot of this, what I would call overreaction over the last couple of days, Marley.
And Dale, I haven't heard anyone use that term, but I actually think it's really evocative, the AI angel of death, especially with what we saw in trucking yesterday, commercial real estate. I mean, you can make the argument for the software space as well. When we look at it and how much it's tanking some of these specific sectors, and then having these conversations like I'm having with you, where most people are saying they think it's unnecessary, they think it's overblown, is it permanent death? Is it the angel of death has come and you're gone and buried? Or is it a temporary kind of death and the market will rethink this? It was just a quick knee-jerk sentiment that caused these significant drop-offs we're seeing.
I think it's more of the latter. I think you're going to see this knee-jerk reaction when a new innovation comes out, and essentially AI looks to replace this or that, maybe a widget, it may be a service. Whatever it is that AI is looking to replace, that sector will be sold off. And like I said, I believe long-term it's going to work itself out, especially with these companies that have significant cash flow. Like Charles Schwab going at a steep discount, the Schwab stock itself. And I know we're on the show, right? But talking about that specific financial services sector, Schwab taking a big hit simply because a new company is coming out with a piece of tax software. You've got to believe that these other brokerage houses are going to be working similar software into their existing platforms. So I do think it's an overreaction when you look at it that way, Marley.
And you have another really interesting observation in the notes that you sent over. You likened this market to a Rorschach test, or the ink blot test. Walk me through that.
So true. This ink blot test, where if you may look at something and see a gorilla, I may look at it and see a butterfly. This ink blot test, or the Rorschach test, is really more probably politicized than anything, depending on what side of the aisle you look at, definitely what philosophy you have on this overall economy and the market. You're going to look at similar data. You're going to look at it. I'm going to say one thing. You're going to say the other thing, depending on your objectives and really the spin that you want to put on that. And it can be done. You look at the most recent data we just received, the jobs report. Incredible news. We added 130,000 jobs in January. That's amazing, especially on the backs of a tariff. You could look at that and be extremely bullish. Tariffs in April, we've seen manufacturing climb higher. We've seen healthcare climb higher. The same report, though, Marley, you can dig a little bit deeper and see that last year's jobs data was reduced, essentially. The jobs added was reduced by almost 900,000 jobs, which tells us for the second year in a row, we've been pretty flat on job creation in this economy. The GDP continues to grow. That's a great thing. You may look at that and think, well, GDP is growing because we have all-time productivity in an American worker due to AI, and it's going to replace every employee. Therefore, no one's going to have money. You're going to have a K-shaped economy. These two dynamics are going to continue as we see this disruption in AI. I think it requires discipline from the investors and turning off the noise and staying true to your plan.
So you make a compelling argument there. Also, in that conversation, how much of the volatility that we're seeing is tied to the Fed moving slower than the market seemingly wants it to?
I think that a lot of that, at least at the beginning, maybe let's say at the end of 2025, maybe even the beginning of 2025, we saw the Fed reacting to interest rates. We'll just take their interest rate policy specifically. that we've seen a reaction that's a little bit slower than a lot of people desire. The labor market is weakening. We see that. This January report sends a little mixed signal, but we see the labor market weakening, and we still do not see rate cuts, which is traditionally the way that we would see that come to fruition. Now, again, some of that may be political, Marley. I'm not here to debate that. But I'm telling you, AI, artificial intelligence, is going to change the way that the Fed has to look at rate cuts. In our opinion, rate cuts may not be the effective tool that it once was with sparring the labor market a little bit higher.
Well, Dale, we appreciate you being with us on this Friday, taking time ahead of your weekend. We hope you have a wonderful weekend. Dale Smothers, President and CEO at RDS Wealth Management. And we've got